What if I told you there's a government-backed refinance program that can lower your mortgage payment without an income check, without an appraisal, without a credit check? Sounds too good to be true, right? Well, it's real, and it's called the USDA Streamlined-Assist Refinance. If your current loan is through USDA and you've made all your payments on time, you could unlock some serious savings with minimal paperwork. In this video, I'm breaking down how the program works, who qualifies, what fees you can roll in, and how much it could save you. Let's get into it because this is one of the most overlooked refi options out there. Now, this refinance is only available to folks that already have a USDA loan, either a direct or guaranteed. And the whole point is to lower your mortgage payment with as little hassle as possible. No appraisal, no credit score requirement, no debt to income ratio check, and no employment or income verification. The only big requirement is that your new mortgage payment, including the taxes and insurance, needs to be at least $50 lower than the one that you have now. That ensures that it's actually helping you and not just resetting the clock. Personally, I probably wouldn't refinance to save 50 bucks a month. Hopefully you can save more than that, but they got to set the bar somewhere. And real quick, if you're thinking this might work for me, but you're not sure if you qualify or not, let's find out together. Book a free appointment at calendly.com/monarchlender, and I'll personally walk you through all the numbers, and no pressure and no hard credit pull needed at first to see if this might make sense for you. All right, now back to the good stuff. Now this is important. Unlike conventional refis, USD actually allows you to roll a lot into the new loan and there's no appraisal needed. Here's what you can include: your current loan payoff, accrued interest, reasonable closing costs, the new USDA upfront guarantee, which is 1%, and up to 2 discount points to buy down the interest rate, which could make sense if you're planning on staying in the property long term. But here's what you can't include: late fees, past due property taxes, cash out for personal use, and subsidy recapture. For USDA direct loans, that's handled separately. To qualify for USDA Streamlined-Assist Refi, you'll need to have a current USDA loan, made on-time payments for the last 12 months, still occupy the home as your primary residence, can't be a rental, have household income within the USDA limits for your particular area. Just to reiterate, no new income documentation or asset documentations is required. And again, no credit score minimum. Even if your credit score is taken a hit or maybe your home value's dropped, still might be eligible. This is a payment relief loan. It's not like a traditional refi where all the documentation gets verified again. Now here's where a lot of people will ask, what's the max loan amount? USDA Streamlined Assist is not limited by an appraisal because there isn't an appraisal. Instead, your new loan can be the unpaid principal balance, plus interest due, plus eligible closing costs, and plus that 1% USDA guarantee fee. There's no formal max loan to value like FHA refi loans have, and there's no USDA calculator provided, but I can help estimate your payoff and costs pretty quickly. Now, this flexibility makes the program attractive, especially in country, rural areas where sometimes the appraisals come in low. Now let's clear up a few common questions. Can I get cash out? No, this program doesn't allow cash out. Is the USDA fee refundable? Unfortunately not. Once it's paid, it's non-refundable, even if you refi. What if I've had a drop in income or a job change recently? That doesn't matter in this case because they're not going to do any re-verification of your employment history or income. What if I got a direct USDA loan and have subsidy recapture? That's handled separately at payoff, but it doesn't necessarily disqualify you. And if you're wondering what is a USDA direct loan, we have a whole nother video on USDA that goes a little more in depth on that. Can I switch to a conventional loan instead? You can, but unless you have 20% equity or more, you're probably better off sticking with USDA as you're not going to have any PMI like on a conventional loan. And there's a good chance the rates are lower on the USDA versus the conventional. Now here's the bottom line. If you've got a USDA mortgage and rates have dropped or your current payment feels too high, this refinance option could put money back in your pocket every single month. No appraisal, no credit qualifying, and no income check. And the best part, it doesn't cost you anything to find out if you qualify. Just book a quick appointment with me at calendly.com/monarchlender. We'll review your current loan together and see if the Streamlined Assist might make sense for you. Now, I hope this video helped demystify one of the best kept secrets in mortgage finance. If you know somebody else with a USDA loan, hit that share button, send it to them, and I'll catch you on the next video.